The slowdown in Chinese manufacturing in today's PMI report led to renewed speculation of more interest rate cuts, reversing or unwinding the tightening efforts from 2010 to 2012. So my morning must-read argues against the idea of more easing, which is what prompted the Shanghai Composite Index to rise overnight. Yu Yongding, who is a former central bank advisor, writes in Project Syndicate, the slowdown to 7.8% annual growth in the first half does not warrant a change of policy direction. China must choose between higher growth and faster structural adjustment. It can't have both at the same time. He argues that China needs to and can sacrifice some growth in its transition from an export-driven, investment-driven economy to one that's more domestic consumption and services-driven.
Right now, where's consensus?
Like
Is his consensus under 8%?
Consensus is under 8%, definitely, right now.
Michael, what do you got?
Well, with the Fed and the ECB and all the central banks meeting, Bill Gross is looking to central banks to inflate their way out of trouble. In his latest article posted on the PIMCO website, he talks about the death of equities, and the only way central banks can overcome this is by inflation. Unfair though it may be, an investor should continue to expect an attempted inflationary solution in almost all developed economies over the next few years and even decades. The cult of equity may be dying, but the cult of inflation may only have just begun. Warning from Bill Gross, the king of the bond market. But we have to point this out. A lot of people have called the death of equities, including a magazine owned by this company, Business Week. Go back to 1979, August.
Do I have to?
The death of equities, one of the most famous Business Week covers of all time. Inflation was going to cause the death of equities. Well, I did the numbers. 10 years after that cover was published, the Dow Jones Industrials were up 206%. 20 years after it, they were up 1,154%.